Wisdom, the CSE Investment Podcast. We're here today. We're going to be missing Randy, who, if you saw the announcement, Randy and I were supposed to do the seminar before March, the 2-day intensive, and there's Joni.
Hey.
And so we moved to March 3rd and 4th, and I had a call from Randy this morning. He couldn't be here, but it's because he was at the hospital where his wife was being operated on, and she came through it just fine. So everything's going good there. So we will be seeing everybody on our 2-day intensive covered call seminar on March 3rd and 4th. And we got Cezanne and Joni, who had a good day. Hey, it was kind of back to normal. You guys actually had stuff going on.
Mm-hmm. It was exciting.
Yeah, we got a little special thing we're sending out. We're taking, we record that show, and so we're taking, like when Cezanne did a trade, when you did a trade, not the whole seminar, but just sort of when you start walking through that trade, we'll be letting people see those to help, more people to sign up for your trading service. So that'd be good. So why don't you kind of tell us, since Randy and Keith are not here, got Dirk on here, and Dirk may look out there for some emails. If anybody wants to call in, it's 214-377-1108. 214-377-1108. And before I give it to Cezanne, don't forget to go to our site, compoundstockearnings.com. And you can sign up for the Cal Report, which has been coming out for 18 years now. And comes out on Friday, it's dated on Saturday, and has all kinds of emails from all our clients asking questions. And everybody on the podcast here answers those questions and gets back. And you can see what people are doing, how much they're making return-wise, the problems they have, and see solutions to whatever problems that they bring forth. So that's free, and it's the Cal Report, and you can sign up to it on our site, compoundstockearnings.com. Also, if you want to send in a podcast today or anytime, or an email to the podcast, it's podcast@compoundstockearnings.com, podcast@compoundstockearnings.com. If we get one today, we'll answer whatever questions you have or read your comments. And if not, then we will answer it before the next podcast, and we'll have it on the podcast. Okay, Cezanne, so you had a good trade today. It was kind of back to normal. It's been real slow, what with all the market activity gyrations of the last couple of weeks. And she had a good trade today, and Joni had a great trade yesterday. So how did you explain what you did to yours today?
So Apple gapped out up at the open, and then we were watching the indicators. It showed signs of exhaustion in that upward movement. And so at that point, we were prepared to potentially enter a put, and the indicators did follow through with setting up for downward momentum, and we got in and out of a put on Apple at the beginning of that momentum, and then it continued down for a little bit and turned back around like it does.
Yeah.
But so that was it.
I thought y'all were going to get into one of those contests where you're both talking over each other, but didn't quite happen, because Joni was putting out alerts too. Joni, what happened to your things today?
Yeah, we had several alerts. The market was moving so fast. So we set up the trade. We talked through what was going on with the indicators. And so Cezanne had a prep. I had one almost immediately, but which is really just a regular trading day. Things can move so fast that it misses your entry. You miss the entry because of the price point. Just one of those days. It just flew right by. It's aggravating, but we don't chase it. We just have enough discipline to wait for the next time. And so then there was another alert, things set up, but because of the indicators on the ICE chart, that opportunity actually, we stopped it because it went the other way. And the way that we knew it was going to go the other way is because of the indicators. So in that instance, we were able to exercise some discipline because of what we see in the chart. So there wasn't a trade, but thankfully there wasn't a losing trade because we were prepping one, and it would have gone the other way if we hadn't trusted the charts.
I think the key here, everybody needs to know, is y'all have very specific proprietary charts that you use, our advanced charting, and also y'all use the ICE chart. And what does ICE stand for again? Let people know.
Intraday charting equities.
There you go.
Intraday streaming equities chart. ISE.
Yep.
Either way.
We've also changed the name of the TTM service and TTM seminar, not official on all the paperwork yet, but to macro dash moment trading. And the reason we do that is because the ICE chart that they use to trade on removes speculation from when you get in and get out of a position. And a stock can be going up, it can be going down, and they can trade it either way because they're making their moves based on where the inverted V's and V's are. Is this correct, girls, on the chart, on the ICE chart? And you know when to get in, when to get. It doesn't make any difference which way the stock is going. So you're not ever bound by, well, you don't want to get into QQQ because the trend has been down for the last week or something like that. It doesn't make a bit of difference. And you're always in and you're out within seconds, usually maybe at most a minute. How long were you in that one today, Cezanne?
I'd have to look back on the thing, but on the order, but a couple minutes, I think, by the time it filled and showed on the screen.
Yeah.
Froze up a little bit, but yeah.
They're always back to cash every day.
Yes.
And so it's really, that's why we changed the name because, and I explained this last time, in economics, there's micro and macro trends. And they're trading on what would be, without going into a lot of elaboration, would be the micro aspect of those two trends in economics. And the moment trading, because it's moment trading. They're trading just like it was trading the moment before, but so they're still trading the moment. Macro moment trading. I was going to talk about too today that buy and hold. Everybody's heard of buy and hold, and there's a lot of things you reading about buy and hold, how secure and safe it is, and it absolutely is the best way to invest. The problem is if when you start investing young, buy and hold, if you start at 30, buy and hold for 30 more years, you'll be 60 before you get ready to retire. You need to draw money out of that. If at some point in time, like a number of years ago in the 80s, what was it, Dirk, 85, 86, when we had the big downturn? Remember? 84, something like that?
Sorry, Joe, I was muted. I got the same thing Cezanne does. I can't find that mute button. It was 1987. I think October 21st.
Yeah.
1987, if I remember correctly. I was a freshman in college.
There are many, many, many people that sold out and lost tons of money because they obviously didn't believe in buy and hold. The market always goes down, it always goes up. And what would have happened had you had, like most people during that period of time, and it was most people, otherwise it wouldn't have been such a huge drop, sold, lost tons of money. Had they not sold, today, it's back up where they were, plus a lot higher.
Hey, Joe,
yeah.
I think it's important to note also, back in 1987, we didn't have as many self-directed investors in the market as we do today. Mm-hmm. So a lot of those sell decisions were being made by institutions, not by individuals. Just a difference.
And that's how it always happens. And that's what happened this last big debacle in the last couple of weeks when the market went down. It's coming back strong, and it'll be back. So if you've got the time, you're not drawing money out because you hadn't retired yet, then just don't worry about it. Just live with it. However, if you're a CSE client, we have a couple of cures that enable you to make a lot more money than just buy and hold. You're still going to buy and hold, and we've shown these transactions in the Cal report before. We're going to talk about it, Randy and I, when we do the seminar on the 3rd and 4th of March. Is you buy the stock, buy good stock, a dividend paying stock, some utility or something that maybe pays 2 or 3% dividend or higher if there is something, and then you just sell an out of the money call, regular covered call. Let's say just the third Friday expiration. Sell that call, and it's out of the money, so nothing can go wrong. If the stock goes up and you get called out, you not only keep the premium you sold that out of the money call for, but you also get a profit on the call out. And then you just merely wait, because in all probability the stock is up making the inverted V. That's why I went up and got out. And you buy it again when it comes back down, and then you just sell another call. And it's impossible to lose money doing that. And that way you can make probably 3 times the dividend rate that you're getting. So let's say you start doing this at 30, you're going to have incredible amounts of money because of the compounding by the time you're 60. And then you've got a steady stream of income coming in. So if the stocks, dip down, head down at a big dive or something, it doesn't make any difference because you've got the income to live off of. You're more in a retirement mode now. And you don't have to be retirement mode. I mean, that's not even very old at 60 anyhow. So it's just a perfect way to buy and hold, the most conservative thing you can possibly do, but then have these abilities because of the CSE techniques to make money. If you are older and there is a big dip, you still need money to live off of. And you don't have to go out and sell things for a loss to get that money, because you not only made a lot more money, but forget that for the moment. You've got the ability to keep producing, cash by doing these, selling these out of the money calls and getting the premiums for it. So, Cezanne and Joni's technique, the micro moment trading, does not lend itself to that particularly well because they go to cash. Their specific goal is to do a trade and be in cash within a couple of minutes and let it sit there overnight and over the weekend. Randy's trades are more appropriate because he's got a lot more longer term trading, and we'll talk about that this next coming seminar on the 3rd and 4th of March. And show you how you do these trades by selling out of the money calls. Dirk, do you have anything to enhance that description or anything, or Joni or Cezanne?
Well, I would say that, definitely for the investor starting out, the micro trading lends itself to having a smaller amount of capital to be able to do successful trading as opposed to buy and hold. I know when I was a new investor, I had to join investment clubs, or I had to join dividend reinvestment programs to start building up stock because I didn't have a lot of money to put into it to start with. So I would buy a few shares of a dividend paying stock and then roll those dividends in and additional money every month to slowly acquire the amount of shares I would need to do covered call trading. Had I known about TTM trading back in the day, I probably would have foregone that. I probably would have started with trading cash and getting back to cash. And then maybe once I built up my portfolio, I would have looked at diversifying into both of the strategies. Part of my money in generating cash and part of my money towards building that the buy and hold strategy, which you could use for the covered calls.
And that's the advantage of Cezanne and Joni's trading. This micro moment trading is because they are leveraged to 75, 80, 90% because they're using options, and they're not having to borrow money using normal margin borrowing. So they don't ever owe anybody any money. They just are using the options and they're getting in and out quickly. And again, like Dirk was just describing, excuse me, and like Randy, most of his trades, even if he's using options, he's in there for the longer term. But typically, if you're buying and holding, you're using stocks, and that's the whole theory of the whole thing. But do you have any emails or anything, Dirk?
There are currently no emails in the queue, Joe.
Okay, Joni, you had the email today from our favorite client up in Chicago, and would you read that, because we're full disclosure here, because he actually had a loss. But let's read that.
Yeah, I don't have it pulled up, but I can tell you what it said because
Okay.
I read it in front of everyone. But basically, he was reporting 2 trades, and he does reports every week. And if you read them in the Cal report, you always reveal them. And so he has ridiculous returns. He has 30 and 40 and 50% returns. Well, today he reported, and the market has been super volatile, 600 swings, 1,000 point swings. And in that, he stayed overnight in a trade and ended up losing about 17% in a trade.
Mm-hmm.
Well, he didn't let it paralyze him. He got back in a trade, got himself together, and then generated a 13% profit. So for last week, in the worst ever atmosphere where option prices are crazy, the market is crazy, lots of speculation, he ended up only losing about 4%. So that's a type of trading that we do. It's super conservative. Everybody else is out there guessing and losing their shirts. Doesn't mean we win every time, but what it does mean is we have a strategy in place to minimize those losses, and then we have a strategy in place to regain what you lost. So it's a great example of good trading.
Yeah, and I asked him after I read that email this morning. I shot him another email and asked him to send the results year to date, because it's some astronomical amount. So that net loss he had is minuscule compared to what he's made. And again, that was a terrific gyration of a market.
Right.
So it'll be interesting to see when we deduct that. Still going to be, I don't know, some astronomical figure.
Without a doubt.
Well, and just like Cezanne made 6% today, roughly, about maybe slightly over, and you made I think yesterday or the day before 4-something%. So between the two of you, that's 10%. Most people don't make that in a year. Don't make that in a year, and that's within a really a screwy market after the big debacle of the last couple of weeks, because y'all were sitting there practically nothing to do and you're not going to go out and do something stupid.
Right.
because the things weren't moving. But today it was back to normal. It was back to excitement. And, I mean, y'all were going every second of the seminar. That was exciting.
Yeah.
Yep. Okay. Marcus, do you have any great, fantastic new innovation that we're going to be coming up with or anything?
I do not have any new innovations. No.
Okay. No new innovations. Okay, no problem.
No.
Okay. Well, Dirk, do you have any last thoughts or anything we need to let the folks know that it's going to be?
Just to remind everyone again to go check out the website. Not only can you find our podcast on YouTube, but all the archives from the old radio shows are on the website as well. So if you go there, you can go back and listen to, as Joe mentioned, literally years of history of clients talking about what they do and how they trade and the techniques that they use.
Yep. Okay. Okay. Well, I want to thank y'all for being here. Sorry that Randy, but everybody had a good excuse. And so everybody will be on next weekend. And Dirk, thank you for being here. And Cezanne and Joni and Marcus. And y'all can watch this over and over and over if you get bored, I mean, it's so exciting. So, okay. Bye-bye. We'll see everybody.
Thanks, everyone.
Bye.
Bye.